Hello Market Club members everywhere. Well, here we are at the end of the third quarter, and it's been quite a quarter, of course, and today's rally is quite a rally. We'll discuss that in just a moment, but we're going to be looking at Apple and what's going on with Apple. Here's a brand, it's incredible, probably the best known brand in the world, certainly the largest company in the world, but the stock is going down. As a matter of fact, year to date, the Apple stock is down almost 12%, so it's not exactly knocking it out of the park, so to speak. But we got on the screen right now a long-term chart of Apple going back to 2009 when it made its lows during the sort of recession in 2009, the first quarter. We made the lows there, then we had a steady progression from around about the $20 mark up to 130. So by all accounts, it's been a stellar 5-6 years for Apple. No question about it. The question is now, is it over? Have all the other technologists out there, Google, Samsung, LG, are they all catching up with Apple? Are they showing things that Apple used to have the lock on but doesn't have the lock on anymore? What I want to share with you is just our monthly trade triangles. Put them in right here. So just click on the here, and you can see we have a monthly trade triangle right here. That's on the 2nd of November 2012, and you can see what happened. And we just had one on the July 8th at 123.10. Now the market's trading at 111.42. Now that's a nice rally today given yesterday's downturn. But here's what I want to share with you. We put this in, we actually had a signal yesterday at 109.77. So this to me is a rally to sell. It's not a rally to get sucked into because I don't believe Apple is going to go up from here. The news is, all the good news is out to a large degree. They've sold 13 million telephones last weekend. Great. Now what do? The point is they don't have any really innovative must-have products. These are all tweaks on their old products. Now the cool thing is here, we'll take this off again. You can see we fell from 83, almost $84, all the way down to the lows here, which was around about $58. So it's quite a drop. Percentage-wise, it's definitely quite a drop. But if we put in our percentage, if we put in our Fibonacci numbers, we can just grab it there and go to the lows that we're seeing in 09, the first quarter, and you can see we hit right on the 50%, made that double bottom, 50% retracement, Fibonacci retracement, then we started going up again. Now the question here is, where do we go from here? So let's just go from the top of the screen again, all the way down to the lows right here. And you can see if this progresses, we're going to move down to at least the $94, possibly even the $84 level. $85 level, and that's why this long-term trend line that you see here that is really has been in place since 09. You see the points it's hit, perfect trend line. This is another perfect trend line. If it goes through here, which would be about the 100 level, you're going to see a pretty rapid move down to 94, even to 85. So that's what we think is going to happen. We think the support line is going to come in right here. So I think that's an area where maybe you want to be looking to buy Apple, but right now this does not look good in our opinion for Apple. So I think we're going to see that as a sort of almost a double top, and then a move from the highs, the 130s, down to maybe the 105 level. So we could see that easily going down to these areas right around here, the 85 to 90 level in Apple. You're below the 50 line. Again, this is not a good sign. If the Apple was doing so well, ask yourself this question. If Apple was doing so well, why is the stock going down? That's the bottom line. The action speaks louder than words. So they can have all the PR in the world, all the wonderful things they're doing, but something is going on with Apple, and you should be aware of it. So let's move on. This is a chart of the Dow. As you can see, we go to knock your socks off type of rally today, but it doesn't change a thing. The trend is still down on all three indicators. We're getting close to the 50 line, which is going to be resistance. I think you're better off selling the market here than buying. I really believe that. So let's see how that plays out. We are looking for this market to go lower. We gave you numbers yesterday on the downside. You can check yesterday's video if you want to see the numbers. And looking at the S&P, pretty much the same there. A little bit of a turnaround, but generally speaking, the trend is down. And we're going to see this level retested, the 1880 level retested again, and probably broken in our opinion. So it looks as though we have a lower count on the downside. See yesterday's video for that, and all of our trade triangles are green. This is a sort of grit your teeth, sit there, watch it, and eventually we believe the trend will resume on the downside. Pretty much the same with the NASDAQ, very oversold, a little bounce, still in a negative trend, all negative trade triangles. It's going to go lower. This, I think the rally will fizzle out towards the end of the week. I think Thursday and Friday we'll see, in the first days of the new quarter, we'll see this coming under pressure. Euro-dollar, sort of really nothing to talk about there, just flopping around the 50 line. We have all green trade triangles. I have to respect them. I would say the trend, if I wanted to do anything, would be on the upside, but for now I don't see anything really dramatic to jump into this market. Gold's gone down. Now we've got a daily trade triangle that says get out. You should be neutral. We've been neutral on that for some time. Actually, that kicked in. If we put the daily in, you can see it kicked in right here at 1,132. The market's quite a bit lower than that, and that's the key thing. The trade triangles get you out. It's a neutral position right now, but let's see how this works out. We could still be potentially making a base to push gold higher. And let me just show you what I'm talking about. This potentially could be the base we're talking about. We've round out pretty much around these levels. We'll have to just see what happens, but again, watch the daily to turn green. If that turns green, you want to be a buyer. If it doesn't, just stay out until you see a green trade triangle there. This is crude oil. We had a little signal today that's going higher. We're just flirting along the 50 line. I still think this is a move to go higher, but I want to see a weekly trade triangle turn green. I'm not going to do anything until we see that weekly trade triangle turn green. Hey, we've covered Apple, we've covered all the major indices plus gold and the euro and crude oil. Let's see what happens, but don't get suckered into this rally that you're seeing in the NASDAQ and many of the stocks. I'm Adam Hewson for Market Club. Thanks for watching. Every success. Remember, stay strong, stay disciplined, and trust those trade triangles.